What's up, everyone? Welcome back to my world of stocks. Now, as most of you know, artificial intelligence is really expected to generate trillions of dollars in value over the coming years, and it's really one of the highest growth and most lucrative markets to be investing in. Well, for today's video, I took a look at 5 AI stocks that BlackRock is pouring billions of dollars into. This coming from their most recent SEC filings, and I'm gonna go through these one by one, sharing my opinion on each one of them, and I'll even rank them from best to worst too based on that opinion. I will be leaving out though Apple, Microsoft, and Amazon just because I recently covered those in my previous BlackRock video. So I wanted to show you some different stocks today, and they're very interesting ones and very big purchases. So it's gonna be a ton of fun. And I can't wait to run through all of these with you. So make sure that you hit that like button, subscribe if you haven't already. Let's not waste any more time, guys. Let's go ahead and jump straight into this list, and we'll have it sorted here from smallest to largest purchase among them. Now, coming in at purchase number 1, smallest of the bunch, we have a chips giant that is not named NVIDIA, AMD, or Intel, but is in fact Qualcomm, ticker symbol QCOM, which BlackRock added more than $500 million of during the quarter, increasing their stake up to now more than $15 billion worth in the portfolio. Now, for this one, I gotta say, I actually like it quite a bit. In fact, I've always wanted to own Qualcomm myself, but just never really got around to picking it up, partly because I was more focused on other chip stocks like AMD in the more distant past and then NVIDIA more recently. But QC is another great option too that in my opinion doesn't get as much attention as they should when compared to NVIDIA, Intel, and AMD, despite them being an actual leader in their own right too. For example, when it comes to smartphone chips, their Snapdragon line is not only considered the most powerful and reliable in the space, but it's also helped them achieve dominant market share around the world, especially on the premium side, where they control around 60% according to Counterpoint Research. And even on the budget side of the smartphone market, well, Qualcomm has also done a great job of selling chips that are still strong enough to power AI and gaming, but at much more affordable prices, like in the case of their 7 series, especially the new 7 Gen 4 powering mid-range devices. That strong diversity, though, also extends into other types of markets too, like in automotive, audio, AI, of course, the Internet of Things, which is also further boosted by their recent acquisition of Edge Impulse. There's modems and connectivity, which they've created faster 5G options for now that are integrating their newest AI processors with too. And they also have chips for VR and even personal computers, of course, as well. Many of these branching out markets, though, are really helping them to break new record highs on their financials this year on both the top and bottom line. However, the chips market can be pretty cyclical, with now in particular being a fairly weak time for smartphone sales because of longer upgrade cycles, given how expensive phones have become without much, innovation these days or a big enough reason to go out there and upgrade, spend, $1,000. Folding phones can even get up to like $2,000 to upgrade. It may not be worth it to most consumers. And to make matters worse, Qualcomm themselves are also facing several company-specific issues too, like Apple's transition to in-house modem chips that really could see a complete phase-out away from Qualcomm by 2027. Now, the result being that QC will face some near-term pressure on their growth rates, which are expected to dwindle down to just a low single-digit rate by that same year. Over the longer term, though, I am still very optimistic about their future, especially as AI becomes more powerful in smaller devices, sending demand rising for QC's more premium offerings. Kind of like how, if you want the best GPUs for your computers, you buy NVIDIA. Well, if you want the best mobile chips, probably going to go with Snapdragon. But because of the short-term issues, the stock price has actually lost more than a third of its value, leaving an even cheaper PE ratio than the sector median by a whopping 40%, with also a decent dividend, especially for being a tech stock, at more than a 2.3% yield, with over 2 decades of consecutive growth and a very low payout ratio. And so overall, I just think that the complete package of Qualcomm is actually a bit more attractive than Wall Street is currently valuing it at. And because of that, I am going to put them fairly high on our rankings for now at number 2 until we see the other names on this list, and then we can adjust our rankings as we see fit. Speaking of which, though, coming in at the second purchase here of the bunch, well, we have another stock that I've always been a fan of, but I've never actually purchased it, at least not yet. And that is in Salesforce, ticker symbol CRM, which BlackRock added another $1 billion of in the quarter, bringing their stake up to over $21 billion in total. Now, just so you know, they chose the ticker CRM because this is a cloud-based customer relationship management company, CRM, and it's one that has actually done a great job of scaling up subscription-based revenues by offering a combination of services tied to sales, marketing, and other related solutions to other companies. In fact, they've done so well that they've already grown into the 6th largest cloud provider in the world, only behind other giant behemoths like Amazon, Microsoft, and a couple others. And yet their market share is only around 2%, which means that there's still plenty of room to keep growing there too. And that's very likely to happen, especially with all the integrations they've been making with AI into all of their different services, even adding all kinds of new automation apps that increase accuracy and efficiency. For example, they've shown to reduce costs and increase sales by close to 30% on average, with 98% of customers either meeting or exceeding their return on investment goals after hiring them. And this is huge because really, with the economy facing numerous challenges like high interest rates, inflation, and even tariffs, to be able to go to a company and say, look, you hire us and we'll improve your results even during this challenging environment, that's a very compelling proposition. And so it's resulted in strong financials and rising demand, with both sales and profits expected to continue breaking new record highs in the coming years, according to analyst estimates. When looking at the stock, though, despite some pretty rough volatility, it's mostly been trending upward over the years, but a recent little dip has actually left the valuation surprisingly cheaper than the sector on a more forward-looking PEG ratio because of their higher growth rates. Overall, I do like CRM here, and I think they're even, I would say, pretty well diversified within their own specific markets as much as you can be. Like, for example, with Slack, which is also owned by Salesforce, and it's kind of like the Discord of business productivity, with tons of companies using it to help their workers stay connected, something that I think will be huge for the digital age, and their integrations of new AI features is only making that more attractive than ever before. It's going to be hard to rank CRM against Qualcomm, though, because I really like both of them quite a bit, but if I was forced to choose one, I think I'd give just a very slight edge here to CRM, who I just feel is performing a bit better financially with stronger margins. So I'll push QC down one spot to fit CRM in at number 2, even though I wouldn't mind buying either of those stocks, which I might even do later this year. While I don't currently own either of those two stocks, though, at least not yet, purchase number 3 is actually one of my favorite holdings in the social media giant Meta, ticker symbol META, who BlackRock also added another $1 billion worth last quarter, bringing their stake up to a whopping more than $95 billion in the portfolio. Now, to keep this short and sweet, my overall kind of bull thesis on the stock right now, and especially considering their opportunities in AI, is just how insanely profitable this company is, with a gigantic user base, both of which allows them to not only invest in AI, but also fuel it with new users that they can cross-market to while also using all of their data. So just to kind of quickly break that down for you, last year, for example, they generated close to $100 billion of operating cash flow. And this year, they reached a record-breaking 3.4 billion daily users across all their apps. And they're planning to invest another more than $70 billion on artificial intelligence, including their large language models, new data centers housing millions of NVIDIA GPUs, and of course the metaverse, which when it comes to the metaverse, look, that's either going to be a flop or it's going to take off and be worth trillions long term. But the way I see it, Meta has practically nothing to lose by betting on it either way, because of how really easy it is for them to invest in it financially, ensuring that if it does take off, they'll be a market leader there. The only issue is that the stock has already climbed by by so much recently, which I told you guys during several big dips that I was buying the stock heavily for this reason. So, now at these higher levels, I'll admit that it is a bit less attractive. However, at a PEG ratio that is still only slightly higher than the sector, combined with how dominant they are and all the future potential that still lies ahead, I just think anyone not already invested in the stock should probably buy at least a small amount of it just to not miss out long term. And even though CRM and Qualcomm may have better valuations at the moment, I'd still rank Meta higher at number one because of the complete package you get of safety, value, future potential, dominance, and more. So Meta is really one of my favorites in my own portfolio, and it's getting the number one ranking here as well. All right, with that said, though, we are now left with the two biggest purchases of the bunch. And coming in at number four, it's actually another stock that I own myself, and that I'm also a very big fan of. And that stock is, of course, Cisco, ticker symbol CSCO, which BlackRock added another $1.1 billion worth during the quarter, bringing their stake up to more than $22 billion worth in total. Now, yeah, this one, I really like it here. It is trading near a record high at the moment, but that stock has also been fairly suppressed for years, only climbing around 100% in the past decade, which is actually not very much considering really how all of the exposure that they have to AI has been growing, getting bigger, and that's a market that has been red hot. So it's playing out very well for Cisco. Now, the valuation is also pretty decent too, trading around 20% cheaper than the sector on a forward PE basis, with also a pretty attractive dividend for being a tech stock at over a 2.5% yield on a low payout ratio and over a decade of growth. And really, a big reason why the stock has been, I would say, suppressed over the years is because the company has been going through a transitional phase, moving away from just being more primarily a hardware seller of various routers and switches for connectivity, more so in the past, to now also selling much higher margin software services, especially within AI, cloud, and even cybersecurity. Like, for example, with their acquisition of Splunk, which actually used to be a separate stock that I loved separately for those specific markets too, but now they're combined with Cisco, makes it even more attractive. And these moves are really paying off big for Cisco, helping them return to growth. Last quarter, for example, they not only beat estimates, but they also raised guidance. They grew sales by 11%. They grew EPS by 9%. They grew security revenue by a whopping 54%. And most important of all, they more than doubled their AI infrastructure sales quarter over quarter, breaking north of $1 billion an entire quarter earlier than previously forecasted. So they're already ahead of schedule. Plus, they even announced a new deal with Saudi Arabia that should help keep that momentum going in the near future too. You add it all up, and I think Cisco deserves the number two spot here behind Meta for several of these reasons that we just went through, and probably more too that I don't have time to get into. But okay, that's going to leave us now though with the final stock. Now, all four have been great pickups in my opinion so far, but purchase number 5 just happens to be another really strong option that's going to give all the stocks on our ranking a challenge here. And I really like this one long term. It is the AI and data management specialist known as Palantir, ticker symbol PLTR, which BlackRock added another $1.3 billion worth during the quarter, which was over a 9% increase, pretty big increase there, bringing their stake up to over $15 billion in total now. Now, when it comes to Palantir, I'll make this simple for you with one giant pro and one fairly large con. Starting with the pro first, it's that no matter how shaky the macro economy gets right now with inflation, interest rates, tariffs, and so on, similarly to Salesforce, Palantir is just so good at using AI to improve other companies' capabilities and efficiencies that I think demand will always be very high for their services regardless of the macro environment. And that's a very powerful asset to have. If you can grow in almost any environment, that makes your stock extremely valuable in the market. Case in point, over the past year, even with all the craziness going on in the world, Palantir was still able to grow their customer count by a massive 65% year over year, while also closing 139 new deals worth over $1 million each just last quarter alone. Now, that's insane growth considering the circumstances, but it's not even the best part, I would say, because along with this massive growth, Palantir has also been greatly improving and increasing their margins while becoming more profitable than ever before, really. In fact, when you look at the rule of 40, that's a metric used in the software as a service industry. that basically states that, if you take your combined revenue growth rate with the company's profit margins, if it equals 40% or more, then it's considered a strong sign that the company is performing extremely well. And in the case of Palantir, well, they not only match that 40%, they're not only above it, but they're sitting higher than double that amount. They're north of 80% at the moment. And there's really no signs of slowing down either. In fact, they just launched another great AI service, this time a new manufacturing OS powered by AI. It's called Warp Speed, which I think will see even greater demand given all the tariff chaos that is forcing companies to shift production. I think Warp Speed will see a rise in demand from that. Anduril, for example, has already seen a 200 times efficiency gain ever since they started using it. So it's really on fire. Palantir as a whole, by all accounts, is on fire, and I only expect that to continue long term. However, that leads me to the sizable con, which is that all of that success has also caused the stock price to soar to very high levels, where it currently sits right near a record high after climbing by more than 1,000% in just the past 5 years alone, leaving their PE ratios also around that much higher than the sector, with even their more forward-looking PEG ratio still trading over 300% higher than the sector median. So it's a bit expensive, to say the least, to be buying here at these levels. However, like Meta, I still have to rank them very high because I think they deserve a spot in most people's portfolios. So I'm actually going to give them the number 2 ranking, even though, again, I really like every single option that we've seen on this list, but this is how I would rank them. Anyway, what do you guys think? Do you own any of these stocks? Do you agree with my rankings? Do you agree with my comments? Let me know down below if you agree or disagree with anything I said. But hey, thanks again for stopping by, my friends. I hope that you enjoyed the video. I hope you're all doing well out there. I'm going to have a lot more videos. I've been really busy these past couple weeks, but I've got a lot more videos planned, especially around the start of June. We're going to be uploading a lot more consistently with more content. So I can't wait to hang out with you guys more. But for now, take care, my friends. I'll catch you in the next one. All right. Bye-bye.